Good morning, traders. My name is Bennett Tyndall with TradingAnalysis.com. Thank you so much for joining us once again for our Elliott Wave Wednesday live stream. We do apologize for a little bit of a delay getting started here, but a little bit of tech issues in the background, so it happens. Hey, happy Wednesday, 1st of July to you guys. We're halfway through 2020, and what a year it's been. So curious to see what the second half has to bring our direction, but without further ado, let's go ahead and bring in the team. Good morning, gentlemen. Terry, Alex, how are you guys doing today?
Hey, Bennett. Good morning.
Good morning. Good morning, Terry.
Hello, everybody. Man, half the year is gone already. It's crazy.
It really is. This year has gone by way too fast. You know, growing up, right? It's like your parents always tell you, enjoy it now because the older you get, the faster it goes. Well, that's so very true. It seems like, you know, in school, like in elementary school, a 3-month summer felt like, you know, forever. But now 3 months just goes by like it's nothing. So it's been an interesting year. How are things? How are things in your world, guys? Doing well?
Well, here in Serbia, we have a slight increase of cases as well. They're announcing new measures, so pretty much as everywhere in the world. But apparently, European Union opened its borders to us today, so we can travel from today to Europe at least.
Interesting. I know there was some additional travel bans that were taking place there. Yeah,
there was a ban for the last 3 or 4 months.
Yeah, and the U.S. is not being allowed in yet, so we'll see how things go.
That's probably a good thing.
Yeah, if you take a look at our cases, I mean, you know, as we were discussing a couple of weeks back, some of the states that weren't kind of, you know, the typical hot zones initially are now starting to see a little bit of a breakout. I mean, if you look at, you know, this is Texas, and it's certainly seeing a pretty strong move to the upside here in terms of number of cases, as well as hospitalizations and ICU bed capacity. So
it's like a wave moving from the East Coast to the West Coast all the way across the country. New York's peak a month ago. New York's past that peak. If you pull that same graph up for New York, you'll see their case rates drop tremendously. So the center of the attention now is streaking westward across the plains. Yeah.
Yeah, New York, man, that's come off quite a bit, and that was certainly one of the areas that got hit the hardest initially. In terms of just looking at the overall number of daily cases overall, and thank you, Johns Hopkins University, for this awesome tool. It's been very useful throughout this pandemic. You know, the daily cases overall across the board just continue to rise. So we'll keep track of it.
This is the CDC report, Brian. Didn't you know that? Didn't you know that's what you were tuning into? Yes, we're going to get to Elliott Wave. We're going to talk a little bit macro things. I mean, this is affecting this whole pandemic, and the results of this is what's causing the market to do what it's doing, right? So anyway, yeah, we'll jump into the market. So.
Yeah, no, to your point though, Terry, the whole entire situation with the coronavirus had a huge part in obviously the move off of that February high and into the March low. So I think, you know, continuing to kind of review the standings of that and the implications in terms of, you know, how states are going to handle it, I think is obviously important. But
yeah, the economies of Texas right now, is mainly driven by the oil industry. The crude oil price has risen back up, approaching $40, and seems to be stabilizing there. And it, depends on how the worldwide demand of petrochemicals comes back out of this as to what the future holds for those, for those stocks, right? So that's just one thing. Retail investing. Look at the transition in retail investing from brick and mortar to electronic almost overnight. That's really a function of the fact that we had the technology available, as well as being forced into it. You having your hand forced to it, right? Online ordering for your fast food restaurants and stuff. It's kind of holding the restaurant industry together. I know the restaurant industry is struggling in many places because they can't do the dine-in. But for those companies who were able to turn fast enough into, electronic ordering and delivery and pickup and delivery services, then they've done fairly well. So, yep.
Yeah, it's kind of funny you had mentioned that. You had sent me something, I think it was last week, talking about the fact that Apple, the market cap of Apple, surpassed the entire oil and gas sector, which was really quite remarkable and puts things into some perspective there. So, guys, the S&P futures are they're starting to tick back to the flat line here, but overall mostly a muted move overnight. We are in a little bit of a short week. It's a 4-day trading week. The markets are going to be closed on Friday going into July 4th holiday. So I hope you guys have some fun plans with some social distancing guidelines in mind. But traders, let's take a look at where we see the markets currently in terms of an Elliott wave count. As you guys know, we were tracking this move towards 3,200 in this wave 5 within that higher degree wave 1. And taking us back off to the weekly time frame. In fact, this is all the way down to a monthly, but back to the weekly chart here. We continue to operate under the assumption that the wave 4 low is in fact in and did complete at the March, in this case March 23rd for the S&P low. Overall, that gives us a 4th wave flat, which certainly doesn't meet the guideline of alternation, but we end up with the guideline of equality, and that 4th wave did complete like a week away from being exactly equal to wave 2 of the same degree. So from there, the move off the low has been pretty significant and pretty vertical in terms of angle of attack. And we had a couple of alternate counts that were presented to us. One suggested that what you see here was in fact 1-2 of the higher degree. Then we had a smaller degree 1-2. And perhaps this is another 1-2 or maybe 3-4 of this degree 1-2. But as we pointed out, and I just want to reiterate this, as we did have a member post a chart and had asked if this particular count was technically valid. And from a rules and guidelines standpoint, this actually does have a bit of a degree violation unfolding here, and it's to the tune of about 1%. It isn't significant, but this 1% turns into a 2% difference when looking at price action on a closing basis, which is certainly important. So to call that a 1-2-1-2, we just weren't really supporting that idea, given the fact that it would be a degree violation and kind of against the fractal nature of Elliott. So where does that leave us? Well, that leaves us with just a 5-wave move completing into the June 9th high. And really, the move off the March low has been a little bit challenging in terms of establishing your higher degree counts, and let me just show you guys why. As we pointed out going into the breakdown off of that February high, there was the potential for that wave 3 of the cycle degree to have completed right there at the February high, as opposed to the September of 2018 high. From there, this 5-wave move would then give us some sort of a 3-wave retracement, whether that was just a simple zigzag or some sort of complex. So in terms of looking for a 3-wave counter trend move off the March lows, let's go back to what actually unfolded in terms of actual price action. So back off the weekly down to the daily, and let me just go ahead and hide some of these substructures to make it a little bit easier on your eyes. And you'll see that off of this March low, we print a nice motive impulsive 5-wave advance. We then have a little 3-wave retracement here in a wave 2 position, about a 38% retracement. From there, however, this is where things get interesting. In terms of a 3-wave move, typically we're looking for a measured move in terms of equality of the second leg being equal to the first leg, obviously projected from that correction. In this case, you would take this initial motive impulsive advance, and you would project it from that wave 2 completion. A measured move in terms of equality took us to 29.44, and we essentially ran into that 29.44 level and consolidated for a couple of weeks here before breaking higher. So really, up until May 19th, the move off the bottom could have very well have been counter trend corrective, being a 3-wave structure, which would imply another 5-wave impulsive decline. Once we broke through those levels here in the end of May and into April, that's when it became obvious and clear that, okay, we can confirm that 4th wave completion at the March 23rd low, and we're now in our 5th wave of a higher degree wave 1. From here, it's essentially a waiting game, given that that 5th wave, depending on potential news catalysts or other factors that may play into this move, it was kind of a waiting game in allowing that wave 5 to exhaust itself. Because if you know anything about the psychology in terms of Elliott, once this wave 1 of a higher degree is complete, we would be looking for some sort of a larger correction. Now, going back to our discussion in terms of degree violations, we have now seen here in the S&P, at least, not in the NASDAQ, but in the S&P, we have seen a 8.2% correction off the top, which in my opinion, given what we're seeing in the internals and some of the other wave counts, is starting to confirm the makings of this higher degree wave 2. In terms of the higher degree wave 2, we could very well be in some sort of 1-2-1-2 situation. But given what I'm seeing out of the NASDAQ and some of the other leading components of even the S&P, but specifically the NASDAQ 100, I'm actually more inclined to favor something along the lines of a B-wave triangle in progress prior to an eventual resolve back to the area of the previous 4th support near 2750 to 2800. So just kind of watching this consolidation unfold. We did see a break out of this impulsive trend channel, starting to try to push back into that zone, which is kind of appropriate in this B wave. Overall resistance is between the 618 and 786 retracements, so up towards 3175, let's call it, in the S&P. We'll be watching for a move lower. Now back to my discussion in terms of anticipating some consolidation in the NASDAQ based on what we're seeing, or consolidation in the S&P based on what we're seeing in the NASDAQ. Here's a wave count which is very valid. It's technically valid. It meets the rules and the guidelines. It is a little bit of an unusual count. See, the NASDAQ has really had a lot of overlapping price action, which makes it difficult to pinpoint a precise Elliott wave count. We noted this 3-wave structure was apparent not only in NASDAQ in one of our strategy video updates with our members, but we noted the fact that we had this little 3-wave looking structure in Apple, which told us we could very well be in some sort of a B wave of a 4th, which would eventually give us that resolve higher in the wave 5. So not much has changed. We didn't have a live stream last week. Some of our team was unable to make it, so we do apologize. We had it scheduled here for July 1st. So with that, let's go ahead and bring in the team. Gentlemen, what are you guys thinking? What are you seeing? Any comments on our wave count? Anything you want to add to the discussion in terms of the market?
Yeah, like you said, it's mostly been a sideways consolidation period. The month of June, I'm going to steal from my slideshow here a little bit. Mm-hmm. But the month of June started out, with the continuation of the uptrend that we saw in May, only to stall out around June 8th or so, and then collapse down into a consolidation period. So right now, I think the triangle that you have ongoing there is very likely. Yesterday the market surprised us with a big update. Today the futures are down slightly. Let me see what they're sitting at. S&P futures are down 0.14%, Dow down 0.23%. So it's not major significant down, but it's not a big update. And we could continue to see this sideways chop, I think, for a while. The resolution, the good news, I think, is the longer you see this consolidation sideways means the resilience of the market and the resistance of it wanting to go to new lows. So I think it starts to give more and more credence to the intermediate low that you've got forecasted here.
Yeah, that's very well put. And really right now, having patience in this kind of a market, to your point, is going to pay off should we continue to see the defense of these levels. And a nice completed 3-wave structure in the area of the previous 4th will present some pretty solid entry opportunities, not only in the options world, but in terms of your longer term portfolio entries. So We're constructive on the markets. We continue to be. We've got a couple of individual charts that we're watching. Did you guys catch the news in Beyond Meat this morning? I guess they had a partnership with Alibaba. They're going to be kind of attacking Chinese retail, so it's going to be interesting to see. That's a chart that we've been tracking with our members. Let me go ahead and take a look at this, and then we'll carry on our discussion. So,
well, I know last week we had the news that took Beyond Meat down was that the McDonald's completed their trials in Canada and made the decision not to pursue it. But the same day, I think I also saw an article that said Starbucks was partnering with Beyond Meat. Now, of course, Starbucks is known for its coffee more than it is selling sandwiches, but I do think they're looking to grow a bit there. So
Starbucks, that's an interesting one for sure. But yeah, no, to your point with Beyond Meat, and I forgot to mention this actually, we had a webinar event, which we're going to talk about in a minute. But here's a great example of, let me get you off the daily down to just like a 195 half-day chart. So here's a really cool example of where you have an Elliott wave count that was nearing a fifth wave completion, right? And suggesting the fact that, okay, this move is a little extended, it's time to correct and consolidate in some sort of a corrective pattern. And this is a case of, okay, what is it, the chicken comes first or the egg? Or in this case, the wave count or the catalyst. So the wave count was hinting at that move. We then had the news that McDonald's decided to not pursue their relationship and ongoing business arrangement with Beyond Meat. And here's a case where we had the wave count hinting at it. The news catalyst kind of followed. We got a nice little impulsive structure off the top. We actually moved all the way to around the 130 handle. News today has us back up in the 147, probably just some sort of a B wave. Market's kind of taken in the news here. We'll get likely a secondary decline kind of back towards the area of the previous fourth. Once this 5-wave move comes to completion, whatever ends up kind of completing and filling in this price action will give us a good idea as to if this is some sort of a 1-2 situation or maybe just an AB kind of corrective swing. But I like Beyond Meat. It's a good looking chart, and it's certainly one we're going to continue to track. So without further ado, Terry, you ready to bring us full circle with some sector rotations, sir? Let me go ahead and...
Yeah, go ahead and switch me over.
Yeah, I completely
Wait a
forgot.
minute, I'm not in go-to meeting.
We'll get that squared
Give me
up
a
real quick.
second.
Yeah, no hurries. Hey, while you're doing that, guys, just really quickly, if you are interested, let me go ahead and just take the screen back. Today we're launching a new course, our Elliott Wave Fast Track course, which is essentially designed to take you from a level of really no knowledge in terms of Elliott and equip you with what we feel to be kind of the key elements in terms of establishing a foundation for learning Elliott. This is a 6-part course. We just launched lessons 1 and 2 this morning. We'll have lesson 3 out this afternoon, and the others are going to be rolling out tomorrow and Friday. But if I can find my mouse, too many screens here. Just a little bit of information about this course. This course is $299, but we know times have been tough in terms of COVID and everything that's kind of come along with that. Looks like you guys muted yourself. Okay. It is 6 lessons, so we go into the introduction of Elliott Wave. We go into the core patterns. We talk about motive wave, corrective waves. Then we have a lesson on tips and tricks that we utilize to help kind of establish our counts and kind of verify our counts. And then, of course, we go into some application. We're knocking off $50 today, so $249. But we said, you know what? Let's just go ahead and add some more to this. So we're actually going to have 2 live events to follow. So July 11th, we're going to have a private webinar for anybody who takes advantage of this offer. We're also going to have one on July 18th. Essentially, this gives you the opportunity to go through the course, learn Elliott, and come back with any questions you might have. Also, BYOWC, bring your own wave counts. So we'll talk about wave counts. We'll work some charts together. It should be fun. And we're going to take it a step further. We said, you know what, let's go ahead and throw in a month of membership. So that's a $478 value. Today's the last day to take advantage of this offer. $249 will give you 1 month of our Premier Trader service, the Fast Track course, and of course the follow-up webinars. If you want to take advantage of that, tradinganalysis.com/fast-track. And Terry, sir, are you ready to rock?
Absolutely.
All right, back your direction.
Yeah. Okay, guys, using the Optima platform and talking relative rotation graphs, first thing I want to show you, this is, so June has come to an end, and this is the price action that, we just got through covering. Basically, the entire month of June's gains were yesterday. That's what I'm seeing here, right? From here, here's the entry point, and we had a wild ride up, down, and sideways, and the only gains that we made in the month of June were yesterday. Where were those gains, though? Those gains came in technology, discretionary, a little bit of materials, and a little bit of industrials. They departed from utilities and healthcare and energy, basically. So that's kind of interesting. This is the monthly. This is our monthly rotation, since we've got a whole new month going on here. Technology is your strongest sector. Utilities, you can see by the direction of the arrows here, you can see utilities, staples. Healthcare is still coming up, but utilities and staples definitely pushing much lower, as well as real estate. So really, we've got a small entry of healthcare here into the leading quadrant on this monthly chart, but technology buy is the stronger thing. So that's for your investing horizon. For your swing trading horizon, we like to switch this down into a weekly time frame. And in the weekly time frame, we have technology, discretionary communications, and a little bit of materials sneaking in now. So materials I've been talking about the last couple of weeks, pushing over. Most of this in the materials sector, I believe, is petrochemical industry stocks starting to come back, and I'll zoom in on that in just a moment. But we're seeing momentum rise in industrials, financials, and energy, but their relative strength ratio is so far below that of the S&P. The outperformers of the S&P, you're going to find them in these three sectors here right now. So technology, discretionary, and communications, though we're seeing a little bit of a loss of momentum. And that loss of momentum is, is a part of this sideways action that we see going on in the month of June. So I want to flip over here and give you a snapshot of what's going on in the materials sector that I showed just now, pushing over on the weekly chart. This is all relative to the S&P. But I've got this group of DuPont, Freeport, Macaron, Dow, Lyondell, Basel, Celanese, all these guys over here in this improving quadrant. They've got a nice heading. They're positioning themselves possibly to push over here. We're seeing Newmont Mining, which is really the strongest relative strength, and I think that's due to the rise in the price of gold that Alex will talk about here shortly. But they've been in a long period of declining momentum. So here's a quick price chart. This is a weekly price chart. So you can see Newmont rose to all-time highs here about 68 late May. They've declined through the month of June, so they kind of weakened themselves. But this is still a very strong trend structure, and I wouldn't be surprised to see this little period of consolidation and growth continue. This is these are on the weekly. I'm going to switch this to the daily price action, and now these little lines. This is the 200-day moving average, 50-day moving average, and 20. So you can see this weakness on the daily. It dropped. The price action dropped below the 50-day moving average back here at the beginning of June, and is now testing it and retesting that 50-day moving average right now. So I like that one. Here in technology, let's jump over to technology. And the technology, our strongest stocks, and this is the top 20 in the XLK. There's a few more than 20 in the XLK, but it makes the screen cluttered, so I just tend to choose the ones with the largest market cap here. PayPal continues to hold up, as well as NVIDIA, right? So both of these guys are powerhouses when it comes to relative strength versus the S&P, and they're just outperforming all the rest of these stocks. Apple, we like Apple. Apple is rising back up into leadership role, as well as we're starting to see Broadcom and Qualcomm some of these semiconductor stocks are starting to move into play. This is the semiconductor subgroup of technology, and as you can see here, about 80% of the stocks in this list are beating the S&P in terms of relative strength, right? There's only a few, like Taiwan, Semiconductor, Micron, etc. These little guys that are down here, there's only a couple down here in the lagging quadrant, and a few over here in the improving quadrant. But the majority of semiconductors are outperforming the S&P right now. So I got a favor here to give to one of our clients that likes to look at the biotech group. And this is the IBB. This is the top 20 stocks that I have in IBB compared to the healthcare sector. Okay, I'm going to switch this over to have it compared to the S&P. Let's take a look at that. Relative strength of all of these biotechs compared to the S&P, like only two of them, Biogen and Mylan, are to the left of this vertical axis here, which means all of these biotech stocks still have higher relative strength. So healthcare is still in the lead in our weekly. It's not as strong as technology, but a lot of these biotechs are still the ones to keep eyes on. This one here, Horizon Therapeutics, is showing us the highest relative strength and momentum. We're seeing a little bit of a turn here in this, but there's several of them with downtrends. There's a lot of rotation back and forth from this weakening back into this leading quadrant, as you can see by that rotation. So I don't count healthcare out of this market yet, but I do want to keep a lot of my bets here on the technology sector, which is the farthest out into the lead. Okay, here is healthcare. We highlight that again. Healthcare is leading in terms of relative strength, but it has been losing a lot of momentum. And in the subgroup inside of that that's really holding things up is the biotech. So I'll leave that with you guys there now and give it back to you. Or Alex. Alex, would you like to?
Very good, Terry. Much appreciated. Yeah, healthcare has been certainly been interesting. You know, typically speaking, healthcare being more defensive. I think that's beginning to change. So, Alex, whenever you are ready, sir, the screen is yours. Take it away.
Sure, I'm pretty much ready. Yeah, so let's look our usual suspects here. This is the dollar index daily chart. So we are still looking lower in dollar. There is a plethora of reasons why should I am relatively very bearish dollar in the next even a year or two in advance, but we don't have a time to go more deeply into it. But from the technical perspective, we are looking here for this 1-2-1-2. For now, this move higher has been very corrective in nature from the Elliott wave perspective. And I think this is just a complex corrective pullback, which will take us down after some period of consolidation, which might last through the July, maybe even beginning of the August. We have been hearing that the Fed is going to apply a yield curve control in September. We still don't know if this is going to be a actual thing which Fed is going to do, but that will definitely, among other things, be relatively negative for the price of the dollar. And I think dollar is going to go lower. So on some other charts that we monitor, which is also a part of the dollar index wave count, of course, it's euro dollar. For now, we are bullish euro dollar in this 1-2-1-2 situation. Also, we consider this for now to be very corrective. from the Elliott wave standpoint. ABC, X, maybe a small triangle in X, we will see. And then a further continuation to a bit more lower levels, while the S&P potentially does this A or C wave lower. So I expect a little bit more of a risk off as you guys, and I think that will be reflected on this currency board with a little bit more downside play on the risk on currencies. I also see this dollar yen, which is a kind of a stock market yield play. So depends which one is driving it. So a quite nice a little wave structure here. I think it's a complex pullback. We are looking here this for an A or one, ABC for W, X, and then we await another move down to 104.96 here as well, where is this equality fib cluster. So I think this also portrays a relative move down in stocks that we also anticipate. So I'm gonna be also a little bit bearish on this dollar yen because when the stock market is going down, dollar yen tends to go also with it. From the perspective on gold, we are still staying bullish. There is no any signs here that we see that gold is backing off. So our long-term wave count portrays definitely maybe a small pullback to this trend line here. We are still in a measurement ratios of a potential flat. We are keeping this 127 fib ratio still intact. So back to the daily chart, I think this is a 5 waves up in one, this is a 3 waves down in A, 3 waves up in B, and I think we're going to experience a 5 wave move down in C, back to this trend line support down to 1650, and from there I think we're going to continue higher. As you can see on this higher time frame, we are facing a resistance on these levels before, which on this corrective wave count we labeled as a B wave, and the next stopping place should be a previous highs above 1920. So as long as the gold is trading in this area here, I'm going to be very constructive on it. Definitely, I would not like to see a break of this 1450 levels, because that will put me and my wave count into a neutral position and then slightly more bearish if I see these levels taken out. As cryptos are concerned, we are still tracking a move lower. We are short, so as you know, guys, so we are looking for a longer term wave count, and for now this wave count is relatively bullish on cryptos, and we're going to keep this view until the major if we see some major invalidation levels, which we definitely don't see for now. Our overall wave count stay positive. This is either 1-2 or a big triangle in developing. We expect the lower levels. And if you want to join us on our crypto service, I think we are the probably only ones there which do analysis and trade cryptos in the same time, and quite nicely this year or 2 years that we are having this service with trading analysis. So if you like to join us on our Forex or blockchain service, please do. We do analysis and trade all of these markets. So please join us. And the levels I'm expecting for a Bitcoin is close to 7.5 or a little bit lower, maybe 7,500 for a potential lows, and we're gonna go out if we get to these levels. So that's a brief update, Bennett.
Very good.
I've been brief as I could because there's a lots of stuff going on there.
You still have the triangle count in Bitcoin mapped out, right? As a possibility. I know you just
we still have a triangle wave count, but the one problem I see with this triangle is that since we can go into discussion, are the Bitcoin and S&P are correlated? Terry also followed that on Optima, and there is no actual mathematical correlation between these two. But we have seen some correlation day to day, at least partial one. So this E wave should go pretty much close to this 6,000, even 5,500 to reach this E wave. Usually, E wave can be shorter, but usually we at least get some proportion between this D wave and E wave, which actually will tell us that this this move down will be a little bit longer than we anticipate now. Okay, so maybe this portrays a little bit lower levels in the S&P, I don't know, but this E wave 618 compared to the previous wave in triangle comes around 5,628, which is around $1.5, almost $2,000 below our current flat wave count, which we expect here. So it's definitely a little bit lower, but if you look this also, it is interesting. It might gonna form inverted head and shoulder, which is one of the classical technical patterns. If you can see here, so this will be a left shoulder, head, right shoulder, which is actually a bullish kind of a count or a pattern. So this also levels comes around 6,400. So I think in this range from 7.5 to 550 or 6, we are expecting some type of a firmer low in Bitcoin and continuation on the upside.
Very good. Much appreciated, Alex. Yeah, it certainly looks like there's some good opportunities setting up there in the crypto markets. And as he mentioned, if you're interested in checking out those services, TradingAnalysis.com. We do have service specific to the Forex and cryptocurrencies with webinars for those every week as well. So, guys, I appreciate you tuning in. Again, if you want to take advantage of the sale that we're putting on, you can go to TradingAnalysis.com /fast-track. Just trying to get this back up here for you guys, if I can get the address. But and also, if you enjoyed the content, please give it a thumbs up, subscribe, and turn on notifications if you want to stay up to date. We appreciate it. It lets YouTube kind of know that lets the YouTube algorithm know that you guys are enjoying the content. And once again, if you do want to take advantage of that offer, you get the fast track course. You get 1 month of the Premier Trader service, and then the follow-up webinar. That's a $478 value, $249. Today's the last day to take advantage of that. Guys, appreciate you tuning in. We apologize that we didn't have a show last week, but it happens. And hope you enjoy your 4th of July holiday weekend. The markets will be closed on Friday. So, guys, be safe. Terry, Alex, thank you, gentlemen. And
all right, markets are just about to open. Alex, do you have the 4th of July in Serbia?
Yes, we have 4th of July in Serbia. It's a trick question. I already learned.
Okay. All right.
I love it. I love it.
4th of July.
Thank you, guys. Have a good one. We'll catch you guys next week. Take care.
Bye-bye.